Welcome again to another episode of Route 139, a process of self-awareness and seeking solutions and potential. Well, we have back with us today, by popular demand, Mr. Steve Shalaby. Last time we talked about establishing credit, and we want to focus a little bit more today about credit awareness, maybe even touch on identity theft. Just because you're young doesn't mean that you're immune. So we want to know how to handle money well. We know that money can cause a lot of stress in families and can certainly hold you back from a lot of dreams that you have about going to college and about establishing your future as well too. So everybody wants to have nice things, but wisdom has to be exercised. So today, Steve is going to give us some tips about how to manage money, about credit awareness, and about how to be successful.
On our last discussion, we began to talk about credit awareness. What is credit report? How is credit established? We talked about when to begin to apply for credit, and we discussed that it's very important to start as early as possible. The minute you turn 18, you are legally old enough to have a credit report. That's generally the age that I tell people to go out and get a credit card. Now, how you manage the credit card is a whole different ballgame. You don't go out, as we discussed in our last episode, buying everything up and paying for dinners every time you and your friends go out. What you need to do is make small purchases and pay them off over time. That's what's going to help you establish credit. And as you do that, you have to be cognizant of your balances. You shouldn't really run up a balance, Marilyn, any more than 1 or 2 times your monthly salary. That's generally a good rule of thumb.
But many of these, college students don't really have salaries. Actually, they have more debt because some of them are taking loans. And how many credit cards to start should a young person have? High school, college, and what is a good number to not, get
I would say the minute
behind?
you turn 18, maybe if you're not working yet, if you don't have a lot of financial means yet, maybe you're still with mom and dad,
Right.
don't have more than 2 credit cards. And really 2 is probably pushing it. 1 to pay for gas, to pay for incidentals, things like that, college books, things, is almost a necessity. 2 would probably help you establish a little bit more credit. And then I think parents can also impart a lot of reasoning here, because parents know their kids and they know their level of responsibility. If you are a parent and you have a kid and he's a generally responsible child, you might allow him to have more cards. Certainly more cards will help you establish more credit. It's a tough thing to say how many cards you should have, because there is no magic number. That doesn't mean if you get 5 or 6 you can have better or worse credit. A lot of things go into a credit score. Things like the combination of credit. There's 2 types of credit. There's revolving credit and installment credit. You need to have a healthy combination of both, but that can come later. Maybe when you finance a car, you'll get that installment type credit.
Well, Steve, I know young people want to have many credit cards. What is a good number to start with?
I think a good number, of course, youth come in different degrees of financial means and things like that, and degrees of responsibility. But I think if you are a youth who maybe is still living with mom and dad, you haven't quite began work yet and entered the workforce, then 1, maybe 2 credit cards maximum, in my humble opinion, would be a good start. Remember, there's no right or wrong answer with this. Frankly, the more credit cards you can have, if you manage them responsibly, it's not a bad thing. But 1 or 2 is a good way to get started, especially if you're a parent, you want to kind of manage that process as well.
And that's actually perfect, because as a young person, as a person that's in college or end of high school, but let's say, first freshman, sophomore in college, having 2 credit cards is very reasonable. If you have 1 card for, let's say, paying gas, well, if you're driving, you're going to have to get that card to move. Okay, so that is something you can always use and pay off. The other one can be something else, and then this way that it would be manageable.
I think it's also important to note what kinds of things establish credit, Marilyn, because more times than not, I can't tell you how many times I've received inquiries by people of all ages and of all degrees of professionalism. Oh, well, I don't have credit cards. I prefer to use my debit card for everything. I must have great credit. That's not the case.
Right.
Debit cards do not report credit. So the question then becomes, what things report credit? Or it could also be looked at from a different standpoint, what things do not report credit. Things that do not report credit are generally things that are necessities in life. So when you pay your rent, Is that a luxury? No, that's a necessity.
Yes.
Nobody's going to give you credit for paying your rent. Therefore, it's not reported on your credit report. Your car insurance is not reported on your credit report.
What about your school loans? Do school loans get or go on your credit?
Absolutely. School
Really?
loans are a huge portion of your credit because for many people, it's their first type of legally binding contract.
Yes.
So it's the first account that you get even before your credit cards. So keep in mind that there's many things that are not reported. Car insurance, utility bills, phone, electric, water, cable are not reported. Rent is not reported.
Because those are all necessities.
Correct.
Okay,
The things
got
that
it.
are reported are the things where you have to demonstrate prudent judgment with. Credit cards, mortgages. Somebody might argue mortgage is the same as rent. That's another
It's different.
conversation.
It's
Yeah, it's
different.
really different.
Well, that's something for you all to think about because, if you use those 4 years of your undergrad wisely, as Steve is recommending, to establish credit, once you graduate, the whole idea is once you get your college degree is to land a job. You land a job, and then you want to buy a house, so you want to have nicer things. And so this way, in order to, you need to have a vision. In order to be able to reach those goals, then you need to start to work towards them. Make it part of your undergrad program. Even if you're not a finance major, make it establishing your finance credit history part of your undergrad degree. What do you think of that?
I think that's excellent advice because if you don't put a goal for yourself, you're never going to achieve it. You can't achieve which you do not measure. So talk to somebody. It doesn't matter if it's your banker. Talk to somebody who's been down that road. Generally, somebody who's a little bit older than you, who has had a little bit of credit. Talk to somebody who has good credit. Don't talk to somebody who didn't have good credit established because they're not going to be able to impart good ideas for you. When you get out of school is another subject. We can have a whole nother conversation about this, is when and how to pay off your student loans. How many times should you defer the student loans? This is something that many people struggle with for sometimes decades after graduation. I know professionals that have been paying their student loans for 10, 20 years after graduation.
Absolutely.
And should that be the way things are? Should you struggle to pay back your law school degree for the rest of your life? Well, you don't have to, and it all boils down to responsible judgment, responsible use of credit, creating a budget for yourself so that as much as it is important to buy things that you like, as it is important to tithe, it's also important to pay down your balances, pay down the principal portion of your debt, especially when it comes to student loans, because you don't know what the future may bring. You get married, you have kids, you have a greater need for cash and liquidity, and meanwhile you're struggling paying for student
And you want to
loans.
establish your credit, and you want to buy the house, so you don't pay rent forever, or live with your parents after you're married and so forth. So there are so many different ways to do it. But let me ask you something again about the student loans. And I know we can talk about student loans for a long time. Many of our youth are, indebted. They have a lot of student loans. They want to go into certain careers and so forth. Should they start paying these loans while they're in college? Should they just pay the interest? Should they pay the interest and a little bit of the principal?
answer
Are
is-
these what do you call those? Are those like compounding interests, and what's happening with all these interests at the end of that loan period?
No, those are generally simple interest pre-calculated loans. But the answer to those questions is going to be commensurate with each individual family's financial situation. Because obviously in a perfect world, what would happen? You just stroke a check and you don't have to have loans. But nobody lives in a perfect world. We all have debts, we all have financial obligations, and sometimes things happen. Sometimes bad things happen to good people. So when these things happen, you have to be able to be prepared for them, whether it be by savings or by sometimes having some room on your credit card to take care of an emergency which might arise. So how do you pay off your credit cards becomes a question of what your financial means are. If your parents are able to help you out early in your stages before you really enter the workforce, by all means, pay as much as you can. In fact, I think it can be argued that it's probably the most important thing. If you have, no other debts in your life, you're not paying rent, or maybe help out a little bit with your family because they've asked you to show some responsibility. Your biggest responsibility to yourself and to your future spouse and your future family is going to be to manage that debt.
Okay, well, that's definitely excellent advice. And I know that we live in a world now you just go to McDonald's and you pay on credit card or debit card. So actually having cash in your pocket is not something we see very, very often, but we do see that credit card coming out very, very frequently.
I even have an interesting take on the idea of cash. Been asked before, should I carry more cash or less cash? And my answer to that is generally less cash,
Really?
because you can lose your wallet.
That's true.
But if you lose your wallet and you've got $100 in it, you've lost $100 for good. If you lose a debit card, even if somebody gets a hold of it, there's regulations in places. In fact, there's something called Reg E that the banks have to adhere to, which governs how much time a bank can take to respond to a claim of fraud on your account.
Okay.
So generally speaking, the banks will refund your money much faster. So if you lose your wallet, I would say carry less cash. Maybe enough just to pay your parking or wherever you need to pay, but it's definitely good to have a credit or debit card with you.
Okay, but at the same time, you also need to be careful of that. And if there's any unusual behavior on that credit card, you need to alert your bank immediately. So once you establish that credit, you need to keep an eye on things, monitor it. That's part of the wisdom, is to keep an eye on things so that it's just not out there, and you know where your money is, you know where your credit card is, and if for any reason you misplace it, you notify your bank immediately.
You definitely touch on a really important topic of identity theft.
Sure.
They say 2 out of 5 people now have been affected by identity theft in some way, shape, form, or another. And this is something that's a really, really major concern now, because as credit becomes a bigger and bigger issue and a bigger part of our lives, we have to protect and care for that credit even more. So I think we should continue to talk about credit and credit awareness and identity theft. But I just don't know if do we have the time today, or can
We don't have time today, but we definitely want you to come back. So we're going to conclude part 2 of credit awareness, and we're going to ask Steve to come back and join us again. In the meantime, take care of your credit, learn more about credit awareness, and Steve from Streamline El Financial Corporation will tell us a little bit more. He's a great finance guru. I think you're the best finance guru that there is out there. I think that you can offer us a lot of help and reduce some of our stress. So we ask you again to come and join us again on CYC Route 139. See you again soon.